Good afternoon, everybody, and welcome to our town hall discussion with the Connecticut Small Business Development Center. I just want to take a quick moment just to let you know how the rundown of this is going to go. So you'll see at the bottom of your screen, there's a little blue button that is a chat session. So if you have any questions at all throughout this, please utilize the chat button, and Jeff and I will ask those questions. If there's anybody calling on the phone, you can send your questions into jbond@middlesexchamber.com. Again, we'll do those questions after Matt and Jim do their presentation. So again, thanks for joining us. We so appreciate you being here. We look forward to a great conversation today. And without further ado, I'd like to introduce our Chamber President, Larry McHugh, who will introduce Matt and Jim. Thank you for joining us today.
Well, thank you very much. And again, big thanks to the Connecticut Small Business Development Center for this workshop, which is a very important workshop dealing with the federal funding and SBA. We are very fortunate to have both Matt and Jim on with us today. Both have done excellent workshops for us over the last couple of weeks. So I think most of you know both of them. But again, I can't thank the Connecticut Small Business Center enough for their outstanding work working with our chamber for numerous years with great on service for everyone through Jim, who does a fantastic job for us. And I know Matt really knows Middlesex County. He's a great guy, and I'll turn it over to Matt now to take this over. But thanks, Matt, for everything you're doing, and Jim, thank you very much.
Thank you so much, Larry and Johanna and Jeff, for having us. So I know that this is the second round of PPP funding that's come out, and some of you have probably sat through several of these. So I'll just start off. I'm Matt Puglisi. I'm the Associate State Director for the Connecticut Small Business Development Center. I have two of my colleagues, Jim Jackson, who is the business advisor that serves Middlesex County, and you probably have seen him around Middlesex Chamber. And then we also have Valeria Biscelli with us as well. So they'll both be chiming in throughout and answering questions. Connecticut Small Business Development Center, we provide free business consulting services. And so we're not in it. There's no fee. There's no percentage of any money that you receive or anything like that. We're an SBA resource partner. So we're here to help you in good times and in stressful times like this. So I'm going to switch over to a screen share. I'm going to try to go through things quickly. I'm looking at, the amount of people here and some familiar faces that I've seen before. So I just want to go over some big changes. Please keep yourself muted and put any questions along the way into the chat, and we can get to those questions. Let me just get to the share. All right, so we're going to be going over some federal, state, and other funding sources. We've expanded this so we have some additional information for you outside of just PPP program updates. So the second round of the Paycheck Protection Program began this week. It was on Monday at 10:30 in the morning. Banks began to accept applications again. If you have yet to apply to the PPP program, you can now submit an application. This is done through an SBA approved bank lending partner. So you're not submitting this online to the SBA directly, but you'll be working through a bank. And so most of the banks that are participating in this program have limited the applications to their business banking customers already, with a couple of few exceptions. So you're going to want to start by working with the bank that you do your business banking with. Best thing to do to figure out what their process is, because you're not going to be walking into your local branch. This is going to be completely online. You can Google your bank and the PPP program, and that should take you to their page that is explaining what their application process is. There is limited funding, and it's a first come, first served program. There's already applications that are in the queue from the first round of funding. So if you haven't applied yet, you're going to want to move on this very quickly. So I'll just go over this really quickly. The Paycheck Protection Program is an SBA loan that's administered through approved lenders, and it's really focused on helping businesses keep their workforce employed during this COVID-19 crisis. If you're looking for funds to do some remodeling because your business is shut down, or for some other specific expenses that are not covered in this program, the PPP program is potentially not the right one for you. The PPP is for small businesses with 500 employees or less, or as long as the business meets the SBA size standards in their industry classification. Nonprofits are eligible to apply, so are faith-based organizations, as well as sole proprietors, self-employed, and independent contractors. As we go through this, the majority of the information that we give, if you're a sole proprietor, self-employed, independent contractor, is focused around a regular business with payroll. And you may have some questions in terms of calculating that. We'll go into that a little bit, but we're also available to help you offline with your specific questions. So the Paycheck Protection Program, it's a loan that is going to provide you with 8 weeks of payroll and some additional expenses. It's up to $10 million. That is a loan at a 1% interest rate over a 2-year period. There's no collateral or personal guarantee required. If the loan is used for all of the allowed uses, then it is forgivable. So the allowed uses that will allow the loan to be forgiven are qualified payroll expenses, including some health and leave benefits, payments on mortgage interest, but not principal, rent and utilities, and interest on debt incurred prior to February 15th. These loans are not, again, for lost sales, lost revenue, for inventory purchase that you need to pay, for expansion, for hiring new staff. It is for payroll and a little bit towards these other expenses. In order to qualify for the loan forgiveness, 75% of this loan must be used on payroll, and then 25% can be used on the rent and utilities and the interest payments. To calculate the amount, it is figuring out your average total monthly payroll, and then you're going to go 2.5 times that, and that will give you your maximum payroll cost. Seasonal employers, you're able to edit down your time period from February 15th or March 1st, decide it through June 30th if you're a seasonal business. If your business was not operational in 2019, then you can look at your average total monthly payroll for January and February 2020.
Matt, there is a new guidance on seasonal employers now that allows them to use some different time dates. So have them contact.
Oh, great. Can you clarify that, Jim?
Yes, there was guidance that came out yesterday because some seasonal employers are active at different times of the year than the Paycheck Protection Program anticipates. It also allowed a 12-week period anywhere between June 30th and September 30th, I believe. And we can have that guidance available to folks offline.
Great. So if you have a question as a seasonal employer, please reach out to us and we can help you out with that. So just really quickly, qualified payroll costs include salary, wage, commission, payment of cash tips, payments for vacation, parental, family, medical, sick leave, allowance for dismissal and separation, payment required for the provisions of group healthcare benefits, payment of retirement benefits, and payment of state or local tax assessed on the compensation of the employee. Excluded costs, it's compensation of an individual employee in excess of an annual salary of $100,000. So if somebody is making $110,000, you're going to take that $10,000 off and only use the first $100,000 in your calculation of that average monthly payroll. Other excluded costs, payroll taxes, railroad retirement taxes, income taxes, any compensation of employee whose principal place of residence is outside of the U.S., and qualified sick leave wages that are covered under the Families First Corona Response Act. So as I mentioned earlier, you apply to the SBA approved lenders. If you are needing to find one, check if your bank is. You can go to this link here at the SBA website. The documentation that you're going to need the 2019 tax returns or the 2019 year-end balance sheet and profit and loss statements, the last 4 quarters of payroll forms, verification of the number of employees in payroll incurred over the most recent 12-month period, identifying any employees in excess of $100,000 compensation. If you're a self-employed individual, you're going to need the Form 1099 miscellaneous. Lenders are going to need to verify you qualify and that you are in operation on February 15th, 2020. After you apply to the bank, once you receive a loan number, that means it has been submitted to the SBA. Once you close over the 8 weeks following getting the loan, you have to use the funds and the allowable uses we mentioned earlier: payroll costs, rent and utilities, mortgage, and debt interest. No more than 25% of the amount may be used on the non-payroll costs. So as long as you use all of this loan on these allowable costs, up to 100% of the loan can be forgiven. If you use 26% of this loan on rent and utilities, for example, even though it's identified as something that's forgivable, then that is going to throw off your ratio, and the amount that is forgiven is going to be reduced proportionally. You have until June 30th to restore your full-time employment and salary levels for any changes made between February 15th and April 26th. So if your business shut down and you were furloughing employees or you were laying people off, you have time once you receive this loan to bring them back onto payroll. There's no prepayment penalty with this. So if it takes you a little while to get everybody back up and you are not able to expend all of the funds, you can pay back at the end of the time period everything that you have in excess with no penalty for that. The loan forgiveness. How does the loan forgiveness work? You're going to have to apply for forgiveness and submit documentation proving that you use the funds for its eligible uses. And that is, and you're going to have to certify that. That process is, needing to be documented a little bit more, and when it's time for loan forgiveness, we'll be available to help businesses put that application together and explain the best practices. We're waiting for a little bit more guidance on how that process is going to exactly look. And again, if you don't use the principal amount and of your loan on allowable uses, then it converts to a loan over a 2-year period at 1% interest rate. Another thing that's important, besides having 75% of the loan being used on payroll, to get the full benefit of loan forgivenesses, businesses must keep their employees and pay them at least 75% of their prior year-end compensation. So there's 2 numbers that you're going to have to be paying attention to on the forgiveness side. It's making sure that 75% of the loan is used on payroll, making sure that you have the same number of full-time equivalents on your payroll, and compensating them at least 75% of their prior year compensation. Is there a possibility that you have to pay it back? Yes. Just as I've gone through, if you're using the loan for anything other than these allowable costs, then that is going to convert into a loan and not be forgiven. You will also owe money if you do not maintain your staff and payroll. So the number of staff. Loan forgiveness will be reduced if you decrease your full-time employee headcount. It's full-time equivalents. That's something to keep in mind. That's a question that we get often. And it doesn't need to be the same people. It's about person. The level of payroll. Your loan forgiveness will also be reduced if you decrease salaries and wages by more than 25% for any employee that made less than $100,000. And again, on rehiring, you have until June 30th to restore your full-time employment and salary levels for any changes that you made between February 15th and April 26th. So a question that we receive a lot: my bank isn't accepting PPP applications. Where can I apply? So because applications need to be submitted through a SBA lender, the fintech lenders that we have listed here are all SBA lenders and are accepting applications. So PayPal, Intuit, QuickBooks Capital, Square Capital, Cabbage, Veeam, and Biz2C Reddit. These are all places that you will be able to apply. You do want to be careful. If you're looking for different places to apply online, there are scams that are going on, and you want to make sure that you are working with a qualified lender. So if you have questions on that, please feel free to reach out to us for assistance. Another question right now that we have received a lot. I've submitted my application for PPP, but my bank isn't responding. Should I apply to another bank? SBA has made it very clear that each business can only receive one PP loan, and each PPP loan is distributed based on your tax identification number. If you do not have a loan number from your bank, but you've submitted your application, then you're going to need to follow up with your bank. That means that the lender has not submitted it to the SBA yet. If you follow up, you get a loan number, then the application is into the SBA, the funds are allocated, and you're awaiting the disbursement. If you don't get follow-up, we have some of our advisors have said this morning that banks are saying very clearly to customers, even though they have an existing business relationship, that just with the quantity of applications that come in, that they're not going to be able to work through the queue and get to that person. Then we would recommend you rescinding your application and submitting it to a different lender. Jim, do you have other advice on that that you found out in the field that you'd like to add?
Yeah, I think the one thing you got to watch out for is we've got a few people who have tried to do multiple applications in kind of a horse race fashion, hoping that one will finish first. And that is a risky scenario because the SBA is going to frown on multiple applications coming through with the same identification numbers. So we would recommend that you stick with one horse. If it's obvious that that horse is going nowhere, rescind your application and try another place.
And this is one of those moments where, sometimes in difficult times, we have to say you have to practice a little bit of patience, but this is a first come, first serve situation. And so if you've submitted the documents to your bank and you've not heard back from your bank, you want to follow up with them. There have been times where people have keyed in, an employee, a tax ID number incorrectly, and that can cause some issues. So you're going to want to follow up and make sure that your application is in process and it's moving forward and it's being submitted to the SBA.
Well, not only that, patience is not only a virtue, but in this case, it may be a survival tactic.
Yes. So another question, I'm self-employed. Can I apply to the PPP and how? Yes, you can. If you are the sole employee and you don't have payroll, we can work with you and calculate your correct loan amount. There is a process for that. Valeria, is there anything you would like to add to that?
Sure. Yeah. When you are self-employed, what you would use is basically your Schedule C. What the SBA is asking is that if you have not filed your taxes for 2019, which some people haven't, taking advantage of the fact that there are some extensions available, you will basically fill out a Schedule C for 2019. And you will use your net income amount to calculate that 2.5 times number for the number that you qualify. So it's just, again, a very brief overview, but as Matt has been saying all along, we're happy to help individuals trying to figure it out to make sure that you have it correct, and it doesn't cost you anything. So feel free to reach out.
Great. So we're going to move on to the economic injury disaster loan, the EIDL loan. And again, funding was directed to this program as well last week. But at the moment, the SBA's official stance is that they're unable to accept new applications at this time. They're funding the applications that are already in the queue, processing those on a first come, first served basis. If you have submitted previously and you have correspondence from the SBA and a loan number that begins with a 3, you're in a queue and patience is appreciated, as Jim said. If you would like to further inquire, you can call the 800 number that is listed here. And for those on the phone, it's 800-659-2955. It will be a while, 60 to 90 minutes, is realistic that you'll be waiting, but that is the best way to follow up with the SBA directly, because this EIDL is the one that you applied online directly to the SBA for. The SBA, in terms of other options that you have besides PPP and EIDL, because we know that many businesses have, not been able to receive disbursements yet from the PPP or did not receive as much as they thought from the EIDL program. There is also an express bridge loan. Valeria, can I ask you to talk a little bit about that?
Sure. So the intention of the bridge loan has traditionally been made available as a supplement to the disaster loan. So the idea of this, and it's particularly timely because of how many delays there have been with the disaster loans. You have to keep in mind the SBA usually creates the disaster loans for regional events. Like when we had Sandy, for example, they activated disaster loans. So these things usually happen on a regional basis and not nationally. And so the volume of applications that are receiving, it's what's causing all these delays, right? So the Express Bridge loan is a way to go to your bank and get up to $25,000. Usually, depending on your bank, but usually within 48 hours, right? And so, of course, this has a much higher interest rate than you would have with any of the other loans. And you have the same traditional collateral requirements that you would have for, a lot of the traditional bank loans. The good thing about this, though, is that once you get the funds from the disaster loan, you can cover whatever you took from this right away. And then you don't have to deal with that higher interest rate. So the idea, again, is to supplement those disaster loans and help you bridge the gap of time between you getting the disaster loan and money that you may need, like right now, to cover some of those bills.
Great. Thank you, Valeria. So today is April 29th, and you have one more day. Applications need to be received tomorrow for the COVID-19 Business Response Program. This is a partnership through the state of Connecticut's Department of Economic and Community Development and the Connecticut Minority Business Initiative. It's a line of credit that is forgivable that's being administered by HEDCO. To apply, sorry about that. To apply, you have to be a minority-owned or women-owned for-profit business with minimum of 51% ownership, either of the minority or the woman. You must have 20 employees or fewer, be in good standing with the Department of Revenue Services, and have been in business for at least 6 months. Here's the basics on it. It's up to $20,000. It's 0% interest. It's a 12-month term. There's a $250 closing fee. So allowed uses of this, it's regular business expenses that would have been covered if the pandemic had not happened. In order to qualify for the forgiveness, the funds must be used on the projected expenses that you present in the cash flow document that you submit with the initial application. So the application is pretty simple. It's a one-page application. It's a cash flow statement, a profit and loss as of December 31st, 2019, your current year-to-date profit and loss as of March 31st, evidence that you're up to date with DRS, and evidence to support the needs that you're stating in your cash flow statement.
I just want to jump in with a little something, Matt. That
Yes.
$250 application fee can be rolled into the actual credit line. So you don't necessarily have to have those $250 on hand right now, which I think it's important because, cash is tight for everybody right now when, resources are scarce and your business may be shut down. So you may be concerned about, where am I going to get those $250 from? So you don't have to have them on hand. That can be rolled into the line of credit, just as a point of peace of mind for everybody.
That is great. And so then once the paperwork is submitted and is reviewed, HEDCO will then issue a commitment letter outlining terms and conditions, prepare closing documents, and issue a check. Then we go into the forgiveness piece. Now, Valeria, it is if all of the money is spent on the expenses that are listed in the cash flow statement, then the entirety of the line of credit can be forgiven.
That's correct. As part of the initial application process, aside from that one page form, you project 3 months of expenses, and they have to be consistent with what you spend your money with in previous years based on your income statement that you're going to show. But as long as you show that you spend them on those things that were approved as part of your application process and in your cash flow statement, then you should be able to get all that forgiven. If for any reason you use it for something else, then you're going to be responsible for paying back that portion of what you used. But again, it's 0% over 12 months. So if you see yourself in a pinch and you have to jump and use it for something, again, no personal expenses, right? But as long as it is a business expense and you didn't think of including it and it came up and it's necessary to do it, if you have to pay it back, it's 0% over 12 months. So it still gives you more flexibility that some of the other loans that may be out in the market.
Thank you. So just we have here, beyond these different products from the SBA, HEDCO, are some different grants and that are available. It's really important, as everybody's out there looking for right now, that you find reputable, vetted resources. And so what we're listing here are all ones that have been vetted. And each one has some different limitations. And so if that's something of interest, you should do some further dive on all of these. So quickly, Connecticut Small Business Development Center, as I said before, we are here to assist small businesses in good times and in moments like this. Our advisors have been working to help businesses throughout the state with applications for PPP and EIDL and other advising related to this in terms of the decision process that you have to make. Jim Jackson is at the Middlesex Chamber and serves all the businesses throughout Middlesex County. But we have 14 other business advisors as well that are available. So we have plenty of hands to help right now. We have a COVID-19 Business Resource Center on our website that we keep up to date with federal and state information and programs that are available. And our website is ctsbdc.com. Let's get into questions. I tried to go through that quickly so we could get to the questions as quick as possible, but equalize the playing field for anybody that's trying to apply for the first time here. So Johanna, do you want to jump in, or Jeff, whoever's?
Yeah, we're gonna have Jeff kick it off. Right now, I don't currently have any emails coming into me, but I will let Jeff do the ones that came into the chat.
Great.
Thank you very much, Johanna. Thank you, Matt and Jim, for great information as always. It's very much appreciated by us and by our members and the business community at large. So I do have some questions that came into the chat here and also some that came into me privately. You may have covered them during your presentation, but we'll go through them one by one either way. So let's start with a member of ours who was told that they cannot combine the PPP loan with the EIDL grant. I guess the question is, what if you received EIDL before you ever even applied for PPP? And is it true that you cannot be forgiven for both, even if you use the funds at different times?
The answer, first of all, the EIDL is, other than the forgiveness part, the advance, is a 3.75% fixed rate loan. So that's not forgivable in any case. What they sometimes do is if you receive your EIDL money before your triple P loan application, you roll an advance into that flat application where you do that. And that all becomes part of your forgivable money. And I think Valeria may also have some information.
Yeah, I'm having a little trouble hearing you there, Jim. So Valeria, do you want to just add to that?
Sure. So the grant portion itself of EIDL is forgivable as long as you use it for the allowable uses. EIDL has its own set of allowable uses as well. It is significantly more flexible than PPP. So it's certainly worth exploring. And I encourage everyone to go to our website and download a resource guide that has a quick and easy comparison between the two programs as to what you can and can't use one or the other for. So you can combine them. What you have to be careful with, which the person that asked the question stated, is that you use them for different periods of time if you are using them for the same thing. So let's say you want to use part of your EIDL grant for rent. Well, then the portion of your PPP that qualifies for rent should not be used for the same month, right? If you're covering any payroll, then you would want to make sure that you use the EIDL grant for a different pay period that you will use the PPP for.
Great. Thank you, Valeria.
Thank you very much for that. Appreciate a quick follow-up. We've been getting a lot of questions from sole proprietors or folks that don't have a lot of employees, and they're wondering about the member draw. And in a normal time, they would pay themselves as part of their member draw, and also, of course, pay their employees. Can that be counted under the PPP 70%? And any other thoughts you have surrounding not only paying your employee wages, but also supporting your member draw as part of a qualified expense under PPP?
So there are two ways of looking at that, and it depends on whether the member draw is being recorded through a K1 or not. If it is recorded through a K1 as an owner draw, then you would look at that amount and include that in your calculation. Otherwise, what pass-through companies would do is look at their Schedule C and where they list the wages for the owner. That's what they would use for the percentage calculation of the PPP in combination with the regular payroll.
Got it. Thank you very much for that answer. Moving right along here. Next question is, if you're applying for DOL's pandemic unemployment assistance as a self-employed individual, will that disqualify you from receiving monies from the PPP and or EIDL programs?
It does for the PPP, but not the EIDL. Again, the EIDL is a loan with a little forgivable front-end portion. But the pandemic unemployment assistance program, which is brand new, so allowing self-employed people to receive unemployment compensation or unemployment benefits for the first time, cannot be used if you're using PPP or vice versa to pay yourself.
Great,
Yeah,
thank you.
and to add on to what, I was just say, adding on, to what Jim is saying, I mean, the PPP program is the goal of that is to keep people on payroll. And that leads into another question that I got sent privately saying, what if I apply and receive PPP money right now, but my business is not open and we're closed down? And that becomes a strategic decision that you have to make as a business owner. If you have that PPP money, then you have to be paying everybody on payroll, and you have to use it as it's outlined, with 75% towards payroll and 25% towards those other costs. The the question becomes then is that something that you want to do, strategy that you want to employ, like doing training and planning with your staff for when your business is able to reopen? Is it best to have everybody on payroll and orientated to the new normal and ready to go, so that when we get the okay to reopen your doors, you're fully staffed and ready to go instead of having a delay? Those become the strategic questions that you have to, begin thinking about. But that's the requirement of the PPP, is to have people on your payroll and be paying them, whether or not your doors are open right now.
Great. Thank you, Matt, for that clarification. We've had a lot of folks call us and say that they received either PPP or EIDL, but in very small amounts, compared to the challenges they're facing. And now, according to their understanding, they're ineligible to collect unemployment. So, for example, somebody received $2,000 in EIDL support, or perhaps also some PPP support, and now they're ineligible for unemployment. But in their forecasting, they think unemployment might be the better path for them. Should they explore returning some of the federal money?
You certainly can. The other thing you can do is use the federal money within the time frame for forgivable purposes, and then once that's all gone, then apply for unemployment under the PUA. Both the EIDL and the Paycheck Protection Program have no prepayment penalties and no fees for prepayment. So you can always take the money and then give it right back if you decide that you've got a better option.
Thank you, Jay. Great.
Valeria, did you want to add something to that? I see it.
Yeah, there are still some questions that we have, and we're still awaiting for some guidance and some specific details regarding the overlap of PPP and unemployment. The main thing that we understand at the moment, is that what they want to avoid is anybody, intentionally or accidentally double dipping, right? So you don't want to be taking funds to pay your payroll at the same time that you're receiving unemployment for the same time period, right? So that is the main purpose of those restrictions. So as Jim was saying, we believe that as long as you are keeping those periods entirely separate, and you're not applying at the same time that you have one going or the other, that you should be okay.
Excellent. Thank you very much. So moving on here back to the chat. I received an email from my bank saying SBA has approved my loan, but they did not give me a loan number yet. They said I am waiting on a DocuSign email. Care to weigh in on that? I'm not sure if she's referring to PPP or EIDL, but perhaps you can take it from here.
If it's the bank, it's PPP. There's no question about that, because EIDL is done strictly through SBA directly. She needs to check with the bank, because what they may be looking for, they may have sent her the closing documents to sign electronically in return. Until they have her signature on those closing documents, they can't disperse the money.
And you really want to make sure that you're checking your junk mail regularly right now, because we've had clients that have received emails from SBA or from the bank that have gone into their junk mail and sat there for several days.
Okay, thank you so much. And we'll see if we need to clarify that further down the road a bit. Okay, for the business response program, what is expected of evidence? What do you need to supply in terms of evidence for the need for cash flow for 3 months? Is it just a simple spreadsheet consistent with prior cash flow statements?
So,
go
ahead, Jim. That's fine.
Typically, because this ties into DECD lending practices and so forth, and normally they have a spreadsheet where you put down all of your normal expenses and so forth, and you can show evidence of what it has been in the past, which you have to do, and then make a projection based on your current condition of what your cash needs are going to be. And then what I've been suggesting to folks is that if you don't have a separate account for each of these sources of funds to write checks from, keep a spreadsheet for the amount of each one, and then carefully document the check numbers you write and what the purpose was for. So you've got a self-made audit trail for where the money has gone. So you can prove it to whichever lending institution needs your evidence.
Okay, thank you very much, Jim. Okay, moving on here. I received an SBA deposit into one of my business accounts. It's not PPP as my application for that was at a different bank. I had applied for a state of Connecticut bridge loan for an SBA emergency loan. How do I determine where this came from and which rules apply to the funds?
If it is a deposit between $0 and $10,000, first of all, go to your online account at the bank and look for the ACH advice that came with that deposit, because the EIDL advances are coming out of the blue, often without any other notification. The ACH advice on that will usually say SBAD and then a whole bunch of other stuff, and may even say the word Treasury somewhere in there. If it says SBAD, that is your cue that was the forgivable advance. The loan that's associated with EIDL, when you come up through the queue for that, SBA will send you an email which asks you to go online and set up an account and finish the closing process for the loan amount. The amount at 3.75% you'd have to pay back. So you will get an email when they're ready to offer you the loan amount and process that. Like you say, the advance will just kind of show up magically in your account. So just look at the ACH note that came with it, and that will tell you that it's the EIDL advance.
Okay, thank you very much, Jim. Moving on here. How is PPP calculated if the Schedule C net is virtually zero because of depreciation carryovers and similar paper losses?
So if your net amount on your Schedule C is 0 or negative, you do not qualify.
Okay, thank you very much. Another question, which I think we touched on briefly, but we'll certainly present it to the three of you. Can you specify about timing of PPP and unemployment? Can you collect unemployment until you receive PPP? I assume the answer is yes, but I'll kick it over to the three of you.
Jim?
We believe you can. The timing here is very delicate, obviously. We believe you can. You have to check in with unemployment every week. So if you are able, now the PUA funds are not yet available because the programming isn't done at DOL, so they're not even taking applications yet. So I think the key here is that if you get your PPP loan first, do not apply for unemployment until that 8-week period's run out and you've used the money. Then and only then go to the Department of Labor for the Pandemic Unemployment Assistance Program. If they open up the program tomorrow or Friday, as they have promised that they're going to try and do, and you get that application in, it's approved, and then a week or two later you get your PPP money, then go right back to unemployment and click on the button that says you now are going to discontinue your unemployment benefit.
By the way, the Department of Labor has also set up a link where you can cancel your unemployment request if you are receiving funds from PPP. So if you apply to unemployment and you're like, oh, I'm getting the PPP, I can't do both, right? So there's a link, a direct link that the Department of Labor has set up on their page for you to cancel based on either your employer or yourself receiving PPP.
Thank you.
Thank you, Valeria. That's good information. I hadn't heard that. We will take that under advisement. Okay, Matt, you had mentioned earlier, and this is our understanding as well, that the existing applications within the EIDL queue, if you will probably take up the funding. So the question is, will EIDL application open up again I can't even register because they're not taking any new applications due to unavailable funding. Have you heard specifically and firmly that that portal will not open up again because the funding that was allotted through the federal stimulus bill will essentially be taken up by what's in the portal?
We haven't heard specifically that it, in a definitive way, that it will not, but the language is very clear that they're working through the queue first. And so we want to be realistic in terms of, the amount of optimism that we have towards it. We don't want people to be sitting there waiting if it's not moving forward. But as soon as we have that information, we surely will update it and share it. And I'm sure you will, Jeff, as soon as they work through that queue and decide to open it up to everybody.
No question about it. Thank you, Matt. This is a follow-up again to the unemployment question. And again, we touched on it briefly, but can you collect unemployment after PPP runs out if your business isn't back to normal income? So it sounds like I'm paraphrasing here, but they're back in business, but not fully operational to the point where revenues are back to expected levels. Can you collect unemployment to essentially make up the difference?
So you can collect unemployment if you are partially unemployed. So and I'm going to tie this up to something else. So one of the concerns that we've been hearing too is from people that have employees that have been furloughed and would qualify for unemployment right now. Particularly with lower wage employees, with the extra $600 from the federal government, they may be making more money being unemployed than being back on somebody's payroll. But businesses work very hard to assemble their teams, and you don't want to find yourself at the point of having to start from scratch and retrain or train a bunch of people that are brand new, because that consumes time and resources for your business too. So you can take advantage of the shared work program that the state of Connecticut has, where basically what happens is you offer your employees part-time employment. It's a reduced amount of hours from what they normally get. And as long as it doesn't go over the threshold of unemployment for the Department of Labor, they can apply for unemployment through the shared work program. So they basically get partial unemployment and partial wages from the employer. And that still qualifies them for that extra $600 from the federal government. So that you can find a compromise that can work well for everybody.
Another piece that I'd like to add to this, Jeff, is that with the PPP program, this was developed in March when June 30th seemed very far away, and it's about to be May 1st. The program is only built until June 30th, and the PPP program only covers 8 weeks of payroll. Depending on how Connecticut moves to reopen and what the business environment looks after that, it doesn't take unemployment off the table for you after you've used and expended the PPP funds on the qualified expenses.
Great. That's very important. Thank you very much. Next one is on the receipt of multiple relief funds and the accounting of such. If I get PPP and the HEDCO funds, how do I show that I am paying separate things for each set of funds and not double dipping?
Well, again, this is similar to what we just talked about, where I would keep I would set up a spreadsheet for each of the two funding amounts. One for PPP, one for the bridge loan or advance loan or any other of these funds. And then as you write checks against the expenses, keep track of that check number and the reason you wrote the check, what you wrote it for, whether it was payroll or rent, utilities, insurance, whatever it happened to be. That is a qualifying expense. So for example, if I have a client right now that had to throw away all of their perishable inventory because they were closed. Once they reopen, they have to buy $5,000 or $10,000 worth of new food to reopen. In that case, they can't use PPP money for that, but they can use their EIDL loan money. So again, by keeping track of each pot of money with a little spreadsheet, and then making sure you've got the check numbers or any cash that you distribute for whatever reason allocated in there. So you've got an audit trail of where you spent the money, what you spent it for, and which pot of money you took it from.
Thank you, Jim. That's very helpful. Another one here is FICA, unemployment, workman's compensation, 401k matches, etc. Do those expenses count towards the 75% under the PPP guidelines? And how far can you go back to as far as including that information if you are allowed to include that in your calculations?
I believe that one of the slides that Matt had the exact list of stuff that's included and not included. The reach back date, I believe, is February 15th if you use that, or March 1st if you use that for your employee.
Thank you very much.
You have
Go ahead, Valeria.
Sorry. What you have to be sure is that you use it for 8 consecutive weeks, right? So you can go back as far as February 15th. For most of our businesses, it will probably make sense around March 20th when the governor mandated non-essential businesses to shut down. So you can go back to like March 20th, and then you have to use it for 8 weeks of consecutive expenses after that. So you want to evaluate, what's worth covering, and that, make a decision in that timeline. And again, you can go back to our guide where the same list that Matt was sharing in the PowerPoint, our guide has that as well. So you can go back to that guide and be sure to double check what is eligible and what isn't, so that you don't have to feel like you have to memorize all these things right now.
And on the CSBDC website.
Great, certainly great resources there. And Matt just shared in the chat a link to the Business Resource Center under SBDC's umbrella, which is very, very helpful and contains great information. So Matt, I know you forwarded over some questions that came into you privately to me. I believe we covered them all. Do you share that assessment? Excellent, thumbs up. Okay, then I think we've exhausted the chat, and I will kick it back to Johanna to see if she has anything that came into her email.
No, nothing came into email. I think Larry might be popping on to say thank you, but just on behalf of the chamber, we're so appreciative of you taking time to do this. I think there was a lot of great back and forth today. And, I learned a lot, actually, and it's been great. So we appreciate your time and appreciate you, Jim, especially being in our office. And we miss seeing your face, but thank you.
Yeah, thank you very, very much, Matt, Valerie, and Jim. A great job as usual. Looking forward to continue to work with you guys as we continue to go through some of the problems that this is being caused throughout our country. So thanks again. Thanks for reaching out to us. We really appreciate it. Our partnership is very important to all of us. Thanks again.
Thank you so much, everybody.
Pleasure.
Thank you all. Take care, everyone.
Thank you.